Welcome back, Zane here with you, and thank you for joining me today. So I want to share some quick thoughts today about why I believe that Bitcoin is an idea whose time has come, and it's something that if you care about your financial future, you should really at least be learning about. And, you may have heard on the airwaves that, big institutional money is coming into this asset class as we speak. Very, very soon, your financial advisor is going to start incorporating Bitcoin into the various managed funds that they recommend. They'll be allocating a portion of Bitcoin to every portfolio. But of course, it hasn't always been this way. But the reason it is happening now is because earlier this year, we had the SEC in America, the Security and Investment Commission, basically approve what's known as an ETF, an exchange traded fund, for the big fund managers in America to be able to go and essentially buy Bitcoin and sell exposure to Bitcoin to their clients. And so now we have the likes of BlackRock, Merrill Lynch, Wells Fargo, ARK Invest. Some of the biggest fund managers in the world are now out there with salespeople all over the place, essentially selling these Bitcoin ETFs to their clients. Now, why would somebody want exposure to Bitcoin? Well, the first reason is because it's been the best performing asset by an absolute country mile over the last 10 years. And that's the first reason. So it's something that can no longer be ignored. And this is why Wall Street is actually now getting involved in Bitcoin. And you've probably heard the saying before, when anything new comes around, a new technology, whether it be the iPhone, whether it be Uber, whether it be Netflix, you have these establishment traditional entities and institutions that are resistant to that change. And a lot of them actually bury their heads in the sand, and they believe that because they've been around for a long, long time, that anything new is not going to disrupt them. But of course, you and I both know that Blockbuster no longer exists. Once upon a time, it was one of the a multi-billion-dollar company, one of the highest, fastest growing companies in the world. And of course, now they don't exist because Netflix came and essentially cut their lunch. The same with Kodak, didn't move with the times, and the iPhone. We saw Uber came along. Nobody thought that Uber could work. And of course, it totally disrupted the taxi industry. So these kinds of technological revolutions do take place. And I believe that one is happening right now in regards to money. And there's a really good reason for that, and why it's a time or an idea that whose time has come, and is one that is much needed for society, because money now has become fractured and broken, and we've really seen this in accelerated form since COVID, since 2020. And the way that governments around the world chose to deal with that was through unprecedented money printing, stimulating the economy with JobKeeper, JobSeeker, free handout, stimulus, whatever you want to call it, to prop up the economy. The problem is that money had to come from somewhere, and it was actually not created from taxation reserves or any kind of monetary reserves, because that's impossible when you have countries that are in debt. Instead, it was issued because they're able to control the money supply. But the reality is that all of those handouts have come at a serious cost to the average person via inflation. And so when you start to understand the history of money, how essentially this currency predicament that we're in right now, this inflationary system, is a 50-year-old experiment which began in 1971, when President Nixon broke the gold promise and essentially took America off the gold standard. So from that time, we've had what's known as a floating currency situation, and Australia is the same, whereby governments and central banks essentially are in full control of the money printer with no checks and balances. So what that means is that whenever somebody goes to get a mortgage, just say they get a mortgage for $1 million, that $1 million doesn't come from existing currency units in the system. It is new currency units that is created essentially out of thin air, digits on a screen. But what it does is it creates more debt in the system, thereby diluting the purchasing power of savers. So if you and I are sitting on cash and we're not in assets, then the value of our savings, the value of our stored economic energy is being eroded. And we don't see it at first. We don't see it at first. It takes time for us to really notice it. And this is why governments around the world, they can kind of hang their hat on a 3-4% inflation rate, and people don't really notice because, the price of bread might go up, by 15-20 cents in a year. You don't really notice. The price of eggs might go up by 30 cents, 40 cents. You might not really notice. Even insurance might go up by 50, 60, $100 for the year. Your annual premiums, you don't really notice. But what you do notice is when there is reckless, unprecedented monetary expansion in the system, then you really start to notice it. And that's what we've noticed over the last 4 years. And this is why your insurance premiums have gone up. This is why the cost of living is going through the roof. They'll tell you that they've got everything back under control around 3%. But you and I know that that's a lie, because you've only got to go and look at the price of a basket of groceries, the price of insurance, the price of school fees, the price of pretty much anything that you can name. You know that it's gone up by a lot more than 3%. And so the people at the top who have got their wealth stored in scarce, desirable assets, they're less affected by this, because when monetary expansion is injected into the economy, it flows primarily to those at the top of the tree. So it flows to those who hold assets. And even though there are small handouts, a few crumbs sprinkled to pensioners and to people on rent assistance and carers and people who are on social security, and they say, well, we're going to increase your social security by an extra $10 a week, $15 a week, wherever it might be. They go, oh, thank you, government. That's really, really great. It's great to see that you're helping us get through this cost of living crisis. But they don't realize that the cost of living crisis was actually caused by a system that these people actually created. And so it's not just our government. This is a phenomenon that's been happening around the world, essentially since 1971. And this is why most currencies, in fact, all fiat currencies, eventually die. And it's for this reason that we need to be thinking outside the box. Now, for thousands of years, gold has been a perfect store of value. It's been perfect money. But now in the digital age, I believe that digital gold, Bitcoin, is a far more potent and progressive place to store our economic energy, to store our value for the medium to long term. Now, you may have heard that, Bitcoin's price can fluctuate wildly. It can drop, 20% within a few days. And yes, it can do that. But that is only when you're valuing it in the Australian dollar or the US dollar, a currency that is being expanded at a rapid rate. One Bitcoin is still one Bitcoin. 1 ounce of gold is still 1 ounce of gold. And so you have to understand that these assets, and particularly Bitcoin, are starting to demonetize every single asset class. Bitcoin is demonetizing gold, which has again been recognized as the number one store of value for 5,000 years. But I believe in a digital world, this is the reason why Bitcoin is really starting to demonetize every other asset, including real estate, including the S&P, including the ASX. You name it, every asset class, it is absolutely destroying, because it is the only true digital scarcity, digital hard-capped property that exists. There's only 21 million Bitcoin. That doesn't mean you need 1 Bitcoin to be in the game. There's 100 million Satoshis per Bitcoin. So when Bitcoin gets to $1 million, one Satoshi is going to be worth 1 cent or 1 penny. So you see the divisibility of this monetary network. The longer that it goes, the stronger that this network becomes. It's driven by a thing called consensus, where every transaction is verified, is immutable, it's unbreakable. You can't reverse it. Everything on the blockchain, this digital ledger that exists in cyberspace, is recorded and immutable, and it's there forever. And you and I can participate in this monetary network at any level that we choose. We can put in $50, we can put in $50,000, we can put in $500,000, we can put in $5 million. It's money that we control, that we have the private keys to this safety deposit box sitting on this blockchain, on this ledger in cyberspace. Only we control it. It is unconfiscatable. It is not seizable. It is completely portable. We can travel with our wealth anywhere in the world. You try traveling across borders with more than $10,000, you might get through customs, but if you get pulled up, they can seize it from you. Same with gold. You try going through an airport with anything more than 5, 6, 7 ounces of gold. You just can't do it. And so this is why Bitcoin is a technology whose time has come. And I believe that the more and more people who start to wake up to the fact that the monetary system that we have is really starting to die. It is a system of theft that extorts the wealth from the middle class and the working class. And so unless you're pegged to high-end real estate, like I said, you're really going to be left behind in this new digital money revolution. And there's a really good chance that this vision that they have, the World Economic Forum has, and the globalist countries that are a part of it, this vision for the Great Reset by 2030, where you will own nothing and be happy, there's a really good chance that that will come to pass. And you want to be prepared for that. And 2030 is not that long away. You may have noticed over recent years that the use of cash is going down less and less and less. There's been calls to actually remove cash, to reduce the number of ATMs, which is already happening. People are so used to now PayPass and tap and go. And all of this is a lead into the central bank digital currencies, which are going to essentially, be surveillance programmable money that is going to be attached to our credit score and everything that we purchase. The tax department will be able to essentially reach into your account and debit your account at will. And so this is what's coming down the pike. And for this reason, Bitcoin is something you need to study if you care about your freedom and monetary sovereignty, and being nimble in a changing world. So a bit of a rant there, but I wanted to just plant some seeds with you and to give you some things to think about. I'm going to put a couple of resources here in the comments below, so check that out. I'd highly recommend that you tune into a video by Lynn Alden on YouTube. It's about a 32-minute video which explains how money and banking work and why they're broken today. And if you do nothing else other than watch that video, that'll give you a really good sense as to why Bitcoin is a technology whose time has come. It's a technology that cannot be stopped, that everybody's going to need, and that still very few people still yet understand. And so I'm going to be running some online courses in the near future explaining people how Bitcoin is sovereign money, and how it is really a life raft in this changing world, how you can retire early on Bitcoin, how you can preserve your financial energy, grow your savings on Bitcoin. And so I'm going to be running an introductory free workshop on Zoom very shortly, and I'll tell you about that. In the meantime, thank you for listening. Have a great day. Leave some comments below if you have any thoughts on all of this. Agree, disagree, want me to clarify anything further in a future video. But I want to thank you for listening. This is Zane signing out. Have a great day. I'll see you soon. Bye for now.